What is going on, everyone? We're back again with another video, and in today's video I will be discussing identifying the drawn liquidity, utilizing internal and external ranges with premium and discount. Before we get into the video, I want to tell you guys about my sponsor, Vela Exchange. They have been one of my trusted trading exchanges for personal funds for quite some time now. And with Vela, you can actually leverage up to 250x across crypto, Forex, metals, and more markets. As you can see here, the platform is very user-friendly and you can filter executions, markets, leverage, risk, in just only a couple clicks. Vela has all social media platforms listed on their website here, as well as a 24/7 customer support team to help with any issues at hand. And a link will be posted in the description of this video if you're interested in the exchange. Now let's get back into it. So to begin, we are looking at a weekly chart of USD CAD, and I want to make a clear understanding of what external range liquidity and internal range liquidity is. So external range liquidity can be old highs or old lows. And as you can see, I have a buy side liquidity marked off here, the ERL of a run on this old high. And the way the market books price is it moves from external range liquidity down into internal range liquidity, and we're utilizing premium and discount because we want to make an understanding that we only long or buy in discount of a price swing, and we only sell in premium of a price swing. So what we're looking for here, at least for USD CAD, we're running an external range buy side liquidity pool, and we're looking to target for our drawn liquidity the discount internal range liquidity pool, which is fair value gaps, resting here. A little side note that I did include here, which is why we had a second run on the high after running the external range. This flat top high, or also flat top low, can be used as drawn liquidities because this has inefficiency in price action. So price came back up, retapped into that flat body high, filled in that inefficiency in price, and then we continued to drop, displacing lower. Now we're going to incorporate some time frame alignment here. So we're now looking at a 4-hour chart, because what you do is go from a weekly to a 4-hour chart. But here on this 4-hour swing, we had price break this low and close below it, creating and validating a shift in structure and a change in state of delivery. So what do I see in this price swing? Do I see any sort of means of opportunity? No, for an entry. So what I'm going to do is wait, because price reached discount. So what I'm going to do is now wait for a retracement back into premium of this exact price swing. And what I did is marked off the high and the low. That was the directional swing that took out this external range liquidity pool. Again, old highs and old lows are ERL. Now I'm waiting for a short-term drawn liquidity and expecting price to retrace into premium of the 4-hour range, which is this premium 4-hour bearish fair value gap. Now, as you can see here, we got a clear directional swing retracing into that internal range fair value gap on the 4-hour. That was our short-term drawn liquidity, because again, our long-term drawn liquidity is the weekly bullish fair value gap. So we're still having a bearish bias, but we're just looking for retracements to then follow up again to look to go short. Now, in means of executing on this particular setup, you technically can enter off of this fair value gap and put your stop loss at the weekly dealing range high if you are comfortable with that wide of a stop. But personally, I like waiting for further confirmation after we get that singular retracement, because I typically don't like entering on low risk sells. So what I would do next is wait for a candle closure below a swing low on the retracement. So that is what I'll be waiting for next. And as you can see here, we had price break below this swing low here, but we didn't have the candle closure below, so that wasn't a validated displacement for me. So again, I would still be sidelined waiting for the full displacement closure below a significant swing low to go short then to our external range liquidity pool. Now, obviously, you guys know that wicks do the damage and the bodies tell the story. And as you can see, the bodies were being respected, closing inside of our internal range 4-hour bearish fair value gap. And we finally got that validated shift in structure with a candle closure below. Now, what I will be doing from here on is waiting for price to retrace again into premium of the next dealing range. And as you can see here, we had price create our dealing range from our high to low. We had a run on this external range liquidity, which is a significant swing low. Price retraces, premium of the range, and internal range for value gap. And if I were to enter a trade here, I technically would, because this is now confirmation that we are continuing to our external range liquidity pool bias at this relative swing low. So I would label this as our distribution phase to our targeted draw on liquidity. And if you did enter off of that position, you could see that price then took out the next swing low resting here, which is again external range liquidity. So what do we do now? We wait for price to retrace into premium of the dealing range. So we wait for price to tag the premium, but also I do understand that this fair value gap is resting in discount, but to fill the fair value gap, the tag must hit minimum 50%. So if you were to re-enter again on this trade, you would want to be waiting ideally for the premium tag of that range after we took out the external liquidity pool. And again, you could see this is literally like a cycle of how the market plays out. We move from external range liquidity to internal. We move from discount into premium PDRA, back to down to discount. We create a new dealing range, premium, back down to the external range, create another dealing range, premium, back down to another sell side liquidity pool, etc. We do it again here. We tag, we fill this 4-hour fair value gap, reach premium of the range. What do we expect now? We expect price to reach our original draw on liquidity, this low. And what do you think happened next? We smooth run to the low that we ended up targeting and take out our original dealing range low that had our first tag of discount of the weekly range. But we still haven't reached our weekly internal range liquidity pool bullish fair value gap that was in discount. So what do we expect now? A retracement again after reaching this low. And where does price retrace to? Into premium of this dealing range inside of this 4-hour bearish fair value gap. So where do we expect price to go again next? This low, our external range liquidity pool. And as you can clearly see, our fair value gap was respected once we reached premium of the range, and then we just delivered directly to that low and eventually reaching our long-term draw on liquidity internal range fair value gap. But I hope you guys understand how I didn't use any sort of significant terms in regards to how I found my bias, how I found my draw on liquidity. I literally just used old highs and lows and fair value gaps. I didn't even use order blocks. I didn't use standard deviations. I didn't need to do all of that. The way that price delivers in these markets, it's simple and it can be simplified. It doesn't need to be extended to the max where you have a million different pieces of confluence. All you need is to understand external and internal range liquidity and understand that you should be selling in premium and buying in discount. Stop overcomplicating trading. Remember that you want to make your model as simplified as possible. Backtest everything that you have. Backtest this and you'll understand that it's not as hard as it's out to be. This is the way the market books price, and it's always been like this, and it always will be. This is how I determine my daily bias. This is how I determine my weekly bias. This is the foundation to my trading. Now, I hope you found this insightful. I hope it was of clear understanding to you. If you have any suggestions for future videos or anything that is of a struggle to you, please leave it in the comment section below. And as always, I will catch you guys again next Wednesday for the next video.